corporate loan management, loan origination, and IT technical support interview guide author, Manus AI document type, hiring interview guide format, audio-ready question and answer bank. Introduction. This guide is designed to help interviewers hire a strong candidate for a role that touches corporate loan management, loan origination, lending application support, and practical Linux log investigation in production support environments. In these environments, the best candidates do more than process tasks. They understand credit risk, documentation quality, workflow discipline, system controls, data accuracy, stakeholder communication, and the ability to diagnose technical issues through evidence in operating system and application logs across the full lending life cycle. The material is written in a format that can be used easily for spoken or recorded interviews. Each question can be read aloud directly. Each model answer shows the level of depth, clarity, and judgment that a strong candidate should demonstrate. The answers are not intended to be memorized scripts. Instead, they provide a benchmark for evaluating whether a candidate truly understands the subject. This guide is for interview design and hiring evaluation purposes only. Final hiring decisions should also consider the candidate's actual experience, references, technical testing, and your institution's internal risk, compliance, and HR standards. How to use this guide. The most effective interview combines technical, operational, scenario-based, and behavioral questions. A high-quality candidate should be able to explain not only what to do, but also why it matters from a business, control, and customer perspective. Strong answers should be structured, practical, and supported by real examples. Section, Focus, Question Range, A. Corporate Loan Management Fundamentals. 1 to 30. B. Loan Origination and Underwriting Workflow. 31 to 60. C. IT Technical Support for Lending Platforms. 61 to 85. D. Behavioral, Governance, and Cross-Functional Excellence. 86 to 100. E. Linux Log Investigation Add-on Questions. Appendix. Section A. Corporate Loan Management Fundamentals. Answer. Question 1. Please explain what corporate loan management means in practice. Answer. Corporate loan management is the disciplined administration of a business lending relationship from approval through repayment or exit. It includes monitoring borrower performance, maintaining covenant compliance, tracking collateral and documentation, processing amendments, coordinating with credit and operations teams, and ensuring the loan remains within policy and risk appetite. A strong manager treats loan management as both a risk control function and a client service function. Question 2. What are the main differences between corporate lending and retail lending? Answer. Corporate lending is usually larger in size, more customized in structure, and more dependent on detailed credit analysis, cash flow assessment, collateral evaluation, and negotiated covenants. Retail lending tends to be more standardized and scorecard-driven. In corporate lending, the candidate should understand relationship management, legal documentation, industry analysis, and ongoing monitoring at a much deeper level. Question 3. What are the most important factors you review when assessing a corporate borrower? Answer. I start with the borrower's business model, management quality, industry position, historical financial performance, cash flow generation, leverage, liquidity, collateral, and repayment source. I also review concentration risk, customer dependence, sponsor support if relevant, and any legal or compliance concerns. A strong credit view combines quantitative ratios with qualitative judgment. Question 4. How do you determine whether a borrower has adequate repayment capacity? Answer. I focus first on sustainable operating cash flow and whether it comfortably supports debt service under both base case and stressed scenarios. I would review debt service coverage, leverage trends, working capital behavior, capital expenditure needs, and the reliability of earnings. Repayment capacity should come primarily from recurring business performance rather than from hoped-for refinancing or asset sales. Question 5. Why is cash flow usually more important than collateral in corporate lending? Answer. Cash flow is the primary source of repayment in a healthy commercial loan, while collateral is a secondary fallback if the borrower underperforms. Collateral can lose value, may be difficult to liquidate, and often involves timing and legal complexity. A strong candidate understands that good lending begins with repayment ability, not only asset coverage. Question 6. How do you analyze leverage in a corporate credit? Answer. I compare total debt to EBITDA, net debt to EBITDA, debt to equity, and the borrower's ability to deleverage over time. I also examine what is included in EBITDA, whether earnings are cyclical, and whether debt levels are reasonable relative to peer companies and the business risk profile. Numbers matter, but so does the durability of earnings behind those numbers. Question 7. What does working capital tell you about a borrower? Answer. Working capital shows how efficiently a company manages receivables, inventory, and payables, and whether short-term liquidity is tight or stable. A deteriorating working capital cycle can signal collection issues, inventory buildup, supplier stress, or overtrading. In corporate lending, this matters because short-term liquidity pressure often becomes an early warning sign before full financial distress appears. Question 8. How would you explain the 5 Cs of credit in a corporate lending interview? Answer. The 5 Cs are character, capacity, capital, collateral, and conditions. Character reflects management credibility and willingness to repay. Capacity is the borrower's cash flow strength. Capital refers to balance sheet support and equity cushion. Collateral provides secondary repayment support. Conditions cover industry, market, and macroeconomic factors. A strong lender uses all 5 together rather than relying on one factor in isolation. Question 9. What is the purpose of financial covenants in a loan agreement? Answer. Financial covenants act as early warning controls that allow the lender to monitor credit deterioration before a payment default happens. They create discipline around leverage, liquidity, fixed charge coverage, or minimum net worth, depending on the structure. Properly designed covenants help protect the bank while also creating a structured framework for dialogue with the borrower. Question 10. How do you monitor covenant compliance effectively? Answer. Effective monitoring requires a calendar of reporting deadlines, standardized calculation templates, timely receipt of financial information, independent recalculation of covenant ratios, exception tracking, and rapid escalation of breaches or near breaches. I also compare reported covenant performance with prior trends and management commentary rather than accepting calculations at face value. Question 11. What would you do if a borrower breached a covenant but was still making payments on time? Answer. I would not ignore it, because a covenant breach often signals emerging risk even if payment performance remains current. I would verify the breach, assess its root cause, review updated financials and forecasts, determine whether the issue is temporary or structural, and escalate according to policy. The resolution might involve a waiver, amendment, pricing adjustment, more reporting, or tighter controls depending on the risk. Question 12. How do you distinguish between a temporary covenant breach and a serious credit deterioration? Answer. A temporary breach usually results from a clearly explainable short-term event with a credible recovery path, such as timing delays or one-time costs. Serious deterioration tends to show up as repeated underperformance, liquidity pressure, worsening leverage, margin compression, management defensiveness, or a weak forecast. I would test management assumptions and look for evidence, not just explanations. Question 13. Why is collateral monitoring important after a loan is booked? Answer. Collateral value and enforceability can change over time, especially for inventory, receivables, equipment, or real estate in changing market conditions. Monitoring ensures the lender still understands the collateral position, lien status, borrowing base adequacy, insurance coverage, and any dilution or aging issues. It is not enough to check collateral once at origination and assume it remains strong forever. Question 14. What is a borrowing base, and why does it matter? Answer. A borrowing base is the amount a lender is willing to advance against eligible collateral, usually receivables and inventory, after applying advance rates and eligibility rules. It matters because it ties credit availability to collateral quality and helps control over advancing risk. A good candidate should understand ineligible receivables, concentration limits, aging buckets, and the need for periodic reporting and reconciliation. Question 15. How would you review an accounts receivable aging report? Answer. I would examine the proportion of current balances versus overdue balances, customer concentrations, disputed invoices, credit memos, dilution trends, and any unusual shifts from prior periods. I would also look for slow-moving collections that suggest weak customer quality or operational issues. For asset-based or monitored facilities, this report is an important indicator of collateral health. Question 16. What are the key risks in inventory-based collateral? Answer. Inventory can become obsolete, damaged, slow-moving, seasonal, or difficult to liquidate at book value. The lender must understand valuation methods, concentration, turnover, location, insurance, and any third-party claims or warehouse controls. Inventory collateral can support a facility, but it generally requires more conservative monitoring than cash flow lending alone. Question 17. How do you evaluate management quality in a corporate credit? Answer. I look at strategic clarity, operating discipline, reporting quality, credibility, execution record, willingness to share bad news early, and ability to navigate changing conditions. Strong management teams understand their numbers, explain variance drivers clearly, and respond constructively to lender questions. Weak teams often produce inconsistent information, unrealistic forecasts, or defensive communication. Question 18. What types of early warning signs would make you concerned about a borrower? Answer. Key warning signs include declining margins, missed reporting deadlines, covenant pressure, rising utilization, overdrawn accounts, customer concentration problems, turnover in key management, aggressive revenue recognition, delayed audits, or requests for repeated exceptions. One sign alone may not prove distress, but a pattern usually requires closer monitoring and escalation. Question 19. How do you prioritize a loan portfolio when monitoring many borrowers at once? Answer. I segment the portfolio by risk rating, facility size, industry sensitivity, covenant tightness, collateral volatility, and recent performance changes. Higher risk names receive more frequent review and more detailed exception tracking. A strong portfolio manager combines structured monitoring routines with judgment about where emerging risk is most likely to appear. Question 20. What is the role of risk rating in corporate loan management? Answer. Risk rating translates a borrower's credit quality into a structured internal measure used for monitoring, capital allocation, pricing discipline, approval thresholds, and watchlist management. It should reflect both current performance and forward-looking risk. A strong candidate should understand that accurate risk ratings support governance and prevent delayed recognition of deterioration. Question 21. How would you handle a borrower request for increased limits? Answer. I would treat it as a fresh credit assessment rather than a customer service favor. I would review updated financials, current utilization, repayment history, covenant headroom, business purpose, collateral support, and downside scenarios. If the increased limit is justified, I would ensure the structure, pricing, documentation, and approvals all align with the revised risk. Question 22. Why are loan documentation and perfection of security so important? Answer. Even a sound credit can become difficult to manage if documentation is incomplete or security interests are not enforceable. Properly executed agreements, perfected liens, guarantees, and conditions precedent give the lender legal rights and operational clarity. Documentation quality is a control issue, not just an administrative task. Question 23. What would you check before allowing a loan to move from approval to booking? Answer. I would confirm that all approval conditions are satisfied, financial and legal documents are complete, signatures are valid, security has been perfected where required, pricing and limits are set correctly in the system, covenant terms are captured accurately, and any precedent conditions are documented. A booking error can create both financial and compliance risk, so the handoff must be tightly controlled. Question 24. How do amendments and waivers affect loan risk? Answer. Amendments and waivers can be appropriate tools, but they must be evaluated carefully because they often reflect changing borrower circumstances. A lender should assess whether the request improves long-term viability or merely delays recognition of a deeper problem. The strongest candidates think beyond processing the request and consider portfolio impact, precedent, and control implications. Question 25. What is the difference between a revolving facility and a term loan? Answer. A revolving facility allows repeated drawdowns and repayments up to an approved limit, which makes it suitable for working capital needs. A term loan is typically funded once and repaid over a defined schedule, making it more suitable for equipment, acquisition, or long-term investment purposes. Monitoring focus differs because revolving lines require close control of utilization, collateral, and short-term liquidity behavior. Question 26. How do you think about pricing in corporate lending? Answer. Pricing should reflect the borrower's risk, facility structure, collateral strength, tenor, capital usage, operational complexity, and competitive environment. It is not just about winning the deal, it is about being compensated appropriately for risk and service intensity. Strong candidates understand that underpriced loans can destroy portfolio value even when they perform. Question 27. How would you respond if the relationship team pushed to approve a weak deal because the client is strategic? Answer. I would acknowledge the commercial importance of the client, but I would still present a disciplined view of the risk and any conditions required to make the transaction acceptable. A strong candidate should be collaborative without compromising credit standards. If the risk cannot be mitigated within policy and appetite, I would clearly document the concerns and recommend against approval. Question 28. What is watchlist management, and why is it useful? Answer. Watchlist management is the formal tracking of borrowers with elevated risk due to performance weakness, industry pressure, covenant stress, or other concerns. It creates visibility, accountability, and a structured action plan. A good watchlist process ensures that emerging problems are actively managed rather than passively observed. Question 29. How do you manage communication with a borrower whose performance is deteriorating? Answer. I would keep communication factual, timely, and professional. The goal is to obtain reliable information, understand management's recovery plan, and protect the lender's position without creating unnecessary friction. Strong candidates know how to balance firmness on control requirements with a constructive tone that supports problem resolution. Question 30. What does excellent corporate loan management look like to you? Answer. It means that the lender always knows the current risk position, documentation status, covenant status, exposure levels, borrower developments, and next required actions. It also means exceptions are controlled, users across teams are aligned, and the client receives responsive but disciplined service. Excellent loan management reduces surprises and supports better credit outcomes over the full life cycle. Section B. Loan origination and underwriting workflow. Answer. Question 31. Please walk me through the end-to-end corporate loan origination process. Answer. The process usually begins with lead identification and client discussion, followed by information collection, preliminary screening, underwriting, structuring, credit approval, documentation, condition fulfillment, booking, and post-close handoff to servicing or portfolio management. In well-run organizations, each stage has clear controls, ownership, and system tracking. A strong candidate should understand both the business workflow and the operational checkpoints. Question 32. What information do you request at the start of a corporate loan application? Answer. I typically request company background, ownership structure, purpose of borrowing, historical financial statements, management accounts, projections, debt schedule, bank statements where relevant, major customer and supplier details, collateral details, tax information, and existing facility documentation. The exact package depends on the facility type, but the principle is to collect enough data to assess both risk and structure. Question 33. How do you conduct an initial screening before full underwriting? Answer. I first assess whether the request fits the bank's target market, risk appetite, industry limits, and policy standards. I also look at borrowing purpose, approximate size, leverage, profitability, collateral availability, and any red flags such as adverse history or unsupported growth assumptions. Good screening saves time and prevents weak files from consuming resources unnecessarily. Question 34. What makes a credit memo effective? Answer. An effective credit memo is clear, evidence-based, balanced, and decision-oriented. It explains the borrower, the transaction, repayment sources, financial analysis, key risks, mitigants, structure, covenant package, exceptions, and recommendation. Strong candidates avoid repeating raw data without interpretation. They explain what the numbers mean and why the facility should or should not be approved. Question 35. How do you test the reliability of management projections? Answer. I compare projections against historical performance, industry conditions, customer concentration, margin trends, capital expenditure requirements, and working capital behavior. I also challenge assumptions around revenue growth, seasonality, collection cycles, and cost savings. Reliable underwriting requires an independent view rather than accepting management forecasts at face value. Question 36. What is the role of sensitivity analysis in underwriting? Answer. Sensitivity analysis shows how the borrower performs under less favorable assumptions, such as lower sales, margin compression, delayed receivables, or higher interest rates. It helps determine whether repayment capacity remains acceptable if conditions worsen. A strong candidate uses stress testing to understand downside resilience, not just base case performance. Question 37. How do you decide whether a deal should be structured as secured or unsecured? Answer. That decision depends on borrower strength, cash flow stability, balance sheet quality, availability of enforceable collateral, transaction purpose, and risk appetite. Strong borrowers with predictable cash flow may qualify for unsecured exposure, while weaker or more cyclical borrowers may require collateral support. The key is to match structure to risk rather than applying one template to every case. Question 38. What are the main controls needed at application intake? Answer. Intake controls should confirm that mandatory fields are complete, documents are collected in the correct version, customer identifiers are accurate, regulatory checks are triggered, and the request is routed to the right queue. Good intake controls reduce downstream rework, duplicate records, and approval delays. They are especially important in systems handling high volumes or multiple products. Question 39. How do you prevent incomplete files from moving too far in the process? Answer. I would use mandatory checklists, status gates, system validations, and queue ownership rules. If critical items such as financial statements, beneficial ownership details, or required approvals are missing, the file should not progress automatically. A strong candidate believes process discipline protects both turnaround time and control quality. Question 40. What is the purpose of Know Your Customer and beneficial ownership checks in origination? Answer. These checks help verify customer identity, ownership structure, and compliance with anti-money laundering and regulatory requirements. They protect the institution from onboarding prohibited or misrepresented counterparties and reduce legal and reputational risk. A strong candidate understands that compliance checks are integral to origination, not separate from it. Question 41. How do you balance turnaround time with underwriting quality? Answer. I would streamline non-value-added steps, improve document readiness, use standard templates where appropriate, and prioritize early identification of missing information. However, I would not sacrifice core analysis, approvals, or control checks just to move faster. The best approach is disciplined efficiency rather than speed without judgment. Question 42. What are common causes of delay in loan origination? Answer. Delays often come from incomplete application packages, unclear ownership of tasks, poor document version control, weak communication between business and credit teams, manual rekeying, legal negotiation issues, and system data errors. Identifying bottlenecks requires both process observation and data from workflow stages. Strong candidates can usually distinguish between one-off delays and structural process problems. Question 43. How do you assess whether collateral values are realistic at origination? Answer. I review the valuation source, date, methodology, market conditions, asset quality, and any concentration or liquidation concerns. I also apply prudent margins rather than assuming book value equals recoverable value. If the facility depends heavily on collateral support, I want evidence that the value is current, defensible, and enforceable. Question 44. What should happen between credit approval and loan closing? Answer. The team should convert approval terms into precise documentation, satisfy conditions precedent, complete compliance checks, finalize pricing and operational setup, verify collateral perfection requirements, and confirm that all negotiated terms are reflected accurately in the legal documents and system setup. This stage is critical because small misses can create major post-closing problems. Question 45. Why is accurate system setup important in origination? Answer. If limits, pricing, amortization, covenants, payment schedules, customer names, or collateral references are entered incorrectly, the bank can face billing errors, reporting inaccuracies, compliance breaches, or poor customer experience. System setup is where the approved transaction becomes operational reality. Strong candidates treat data entry and validation as part of credit control, not as minor administration. Question 46. How do you validate that system data matches approved loan terms? Answer. I compare key fields in the system against the approval memo and executed documentation, including obligor names, facility type, commitment amount, tenor, rate, fees, repayment terms, covenants, collateral codes, reporting frequency, and exception flags. Where possible, I prefer maker-checker controls and formal pre-booking validation. Question 47. What are the risks of duplicate customer or facility records in an origination platform? Answer. Duplicate records can fragment exposure reporting, create approval confusion, misstate total borrower indebtedness, disrupt covenant tracking, and cause servicing errors. They also undermine data quality for portfolio reporting and regulatory submissions. A strong candidate should recognize this as both an operational and risk governance problem. Question 48. How would you handle a loan file where financial statements and tax returns do not reconcile? Answer. I would not proceed until I understood the difference. I would compare accounting periods, consolidation scope, adjustments, one-time items, and whether management has a valid explanation supported by evidence. Reconciliation gaps may be innocent, but they can also indicate weak controls or unreliable data, so they deserve careful review. Question 49. What is the role of exception tracking in origination? Answer. Exception tracking ensures that policy deviations, missing items, late conditions, and temporary approvals are visible, approved at the right level, and resolved on time. Without disciplined exception management, institutions normalize control weaknesses and lose sight of accumulated risk. Question 50. What metrics would you monitor to improve the origination process? Answer. I would track turnaround time by stage, first-time right application rate, document deficiency rate, approval to close conversion, rework volume, booking error rate, exception counts, aging by queue, and user productivity where appropriate. Good process metrics should lead to action, not just reporting. Question 51. How do you work effectively with relationship managers during origination? Answer. I try to align early on information needs, timelines, and the likely risk questions from credit and operations teams. Good collaboration means being responsive without lowering standards. The strongest candidates help the front office understand what is required to get a deal approved cleanly and efficiently. Question 52. What does good handoff from origination to servicing or portfolio management look like? Answer. A good handoff includes complete executed documents, accurate system setup, clear ticklers for reporting and covenants, outstanding items list, collateral status, billing instructions, and any risk nuances that require future attention. The receiving team should not have to rediscover key facts after closing. Question 53. How do you approach multi-entity borrower structures or guarantor support? Answer. I would map the legal structure carefully, identify borrowing entities, guarantors, upstream and downstream cash flow relationships, cross-default implications, and collateral ownership. Complex structures require clarity on who owes what, who supports whom, and where enforceability could become difficult. Question 54. What should you do if a borrower asks for urgent funding before all conditions are satisfied? Answer. I would review whether any limited pre-funding is permitted under policy, evaluate the specific missing conditions, escalate the risk, and obtain formal approval if an exception is being considered. Urgency does not remove control requirements. A strong candidate does not release funds simply because commercial pressure is high. Question 55. How do you identify process automation opportunities in loan origination? Answer: I look for repetitive manual tasks such as document indexing, status notifications, checklist follow-up, field validation, covenant tickler creation, and standard report generation. The best automation targets reduce error, improve transparency, and free skilled staff for analytical work instead of manual rekeying. Question 56. Why is data quality so important in loan origination systems? Answer: Origination data feeds downstream servicing, reporting, compliance monitoring, portfolio analysis, and customer communication. If the data is wrong at the beginning, the errors multiply across the life cycle. Strong candidates understand that data quality is foundational to both operational efficiency and risk management, too. Question 57. How would you investigate frequent booking corrections after closing? Answer: I would categorize the corrections by type, trace them to the originating stage, review whether the issue comes from unclear approval language, poor training, weak system design, or insufficient validation controls, and then recommend targeted fixes. Good problem solving means addressing the root cause rather than repeatedly cleaning up the same errors. Question 58. What would make you reject a deal even if the borrower is profitable? Answer: Profitability alone is not enough if cash flow is weak, leverage is too high, reporting is unreliable, legal structure is unclear, compliance concerns exist, the purpose is outside policy, or the proposed terms do not fit the risk. A strong lender is willing to decline profitable businesses when repayment certainty and control quality are insufficient. Question 59. How do you decide what covenants or reporting requirements to include in a new facility? Answer: I base them on the borrower's risk profile, cash flow drivers, industry characteristics, leverage level, collateral dependence, and the information needed to monitor performance. Covenants should be meaningful, measurable, and linked to how the credit could weaken. Reporting requirements should give the bank enough visibility to act before risk escalates. Question 60. What does an excellent loan origination professional do differently from an average one? Answer: An excellent professional combines credit judgment, process control, communication discipline, and system accuracy. They anticipate missing information early, challenge weak assumptions, coordinate stakeholders well, and make sure the booked facility truly reflects the approved deal. Their work reduces delays, surprises, and downstream corrections. Section C. IT technical support for lending platforms. Answer: Question 61. What is the role of an IT technical support person in a loan origination or loan management environment? Answer: The role is to keep lending systems usable, reliable, accurate, and aligned with business needs. That includes incident triage, user support, defect analysis, data validation, permission management, workflow troubleshooting, coordination with vendors or developers, release testing, and problem management. In a lending context, technical support must understand both the application and the business impact of failures. Question 62. How would you explain the difference between an incident, a problem, and a change? Answer: An incident is an unplanned interruption or reduction in service, such as a failed booking or inaccessible queue. A problem is the underlying root cause behind one or more incidents. A change is a controlled modification to the system, configuration, workflow, or data structure intended to fix or improve something. Strong candidates keep these distinctions clear because they drive different response processes. Question 63. A user says a loan application is stuck in workflow. What would you do first? Answer: I would verify the issue by checking the application ID, current status, last completed step, user actions, error messages, and whether the problem is isolated or widespread. Then I would determine whether the issue comes from missing data, permissions, workflow rules, integration failures, or a system defect. The first priority is accurate diagnosis before taking corrective action. Question 64. How do you prioritize support tickets in a lending environment? Answer. I prioritize by business impact, customer impact, regulatory risk, financial exposure, number of users affected, and time sensitivity. For example, a system issue blocking funding, compliance review, or end-of-day processing should rank higher than a cosmetic display issue. A strong support analyst uses severity and urgency together, not on intuition alone. Question 65. What information should be captured in a good support ticket? Answer. A good ticket should include the issue summary, affected user or team, customer or loan reference if appropriate, time of occurrence, exact steps to reproduce, screenshots or error messages, expected result versus actual result, environment, severity, and any workaround already attempted. Complete ticket data speeds diagnosis and reduces back and forth. Question 66. Why is business process knowledge important for technical support staff in lending? Answer. Without business context, support staff may fix symptoms while missing the real risk. In lending, a system error can affect approvals, pricing, regulatory controls, customer communication, or financial reporting. Strong support professionals understand the workflow well enough to assess operational and risk implications, not just technical symptoms. Question 67. How would you troubleshoot a failed interface between the loan origination system and another system? Answer. I would identify the source and target systems, review recent changes, check interface logs, message queues, payload validation, authentication status, timing issues, and error patterns, and determine whether the failure is total or selective. I would also assess whether any transactions need reprocessing and whether downstream reporting or customer activity was affected. Question 68. What are common data quality issues in lending applications? Answer. Common issues include missing mandatory fields, duplicate customer records, mismatched obligor names, wrong product codes, inaccurate dates, inconsistent balances, incorrect interest parameters, orphaned workflow items, and broken links between collateral and facilities. Data issues matter because they often drive both operational errors and incorrect risk reporting. Question 69. How do you investigate recurring user complaints that are hard to reproduce? Answer. I would look for patterns by user role, branch, browser, product type, time of day, transaction type, or recent releases. I would review logs, compare affected and unaffected cases, and if needed collect screen recordings or detailed step-by-step examples. Reproducibility is ideal, but disciplined pattern analysis often reveals the root cause even when the problem appears intermittent. Question 70. What would you do if users blamed the system, but the real issue was process noncompliance? Answer. I would verify the facts, document the evidence, and explain the difference clearly and respectfully. If the workflow is being used incorrectly, I would provide guidance, update training material if necessary, and recommend process reinforcement. Strong support analysts solve the issue without embarrassing users, while still protecting control standards. Question 71. How do permissions and role-based access affect lending system controls? Answer. Permissions determine who can view, create, approve, amend, or override information. Poor access design can create segregation of duties issues, unauthorized changes, or unnecessary delays. Support staff should understand how access supports both productivity and control, especially in approval workflows and post-booking maintenance. Question 72. What is segregation of duties, and why does it matter in loan systems? Answer. Segregation of duties means critical actions are divided among different users so no one person can initiate, approve, and finalize high-risk transactions alone. It matters because lending systems deal with credit approvals, customer data, and financial transactions. Strong candidates understand that access controls are part of risk governance, not just system setup. Question 73. How do you approach user acceptance testing for a lending system enhancement? Answer. I begin with clear business requirements and test cases covering normal flows, exceptions, negative cases, integration points, and access scenarios. Then I make sure business users validate whether the change actually works in real operational conditions. Good testing is not only about whether the screen loads, it is about whether the process outcome is correct and controlled. Question 74. What would you check after a production release affecting loan origination? Answer. I would review critical workflows such as application creation, document upload, credit submission, approval routing, booking, notifications, and interface activity. I would also monitor error logs, batch jobs, performance metrics, and user feedback for early signs of regression. In lending systems, even small changes can affect downstream operations, so targeted post-release validation is essential. Question 75. How do you handle a production issue when there is pressure to apply a quick fix immediately? Answer. I would first assess the business impact and whether a workaround exists. Then I would confirm root cause as far as possible, evaluate risks of the proposed fix, obtain the right approvals for emergency change if needed, and document everything. In controlled environments, speed matters, but uncontrolled fixes can create larger failures. Question 76. What is root cause analysis, and how would you perform it after a major system failure? Answer. Root cause analysis is the structured investigation of why the issue happened, why controls did not prevent it, and what actions will stop recurrence. I would gather timelines, logs, impacted transactions, configuration history, recent changes, and stakeholder observations, then identify the true cause rather than the first visible symptom. The outcome should include preventive actions, not just incident closure. Question 77. Why are audit trails important in lending technology? Answer. Audit trails provide traceability of who changed what, when, and how. They support investigations, user accountability, internal control testing, and regulatory reviews. In lending, audit trails are especially important because approval history, data changes, and exception handling can have material credit and compliance consequences. Question 78. How would you support users during a high-priority month-end or quarter-end processing period? Answer. I would prepare by reviewing known issues, confirming support coverage, validating key jobs and interfaces, and communicating escalation paths clearly. During the period, I would prioritize business-critical tickets, give frequent status updates, and document any temporary workarounds. High-pressure support is easier when planning happens before the deadline arrives. Question 79. What should happen if the system calculates interest or fees incorrectly? Answer. That issue should be treated as high risk because it can affect customer trust, accounting, and regulatory obligations. I would verify the scope, isolate affected products or accounts, stop further incorrect processing if necessary, coordinate correction and communication, and investigate whether the cause is data, configuration, code, or setup. Question 80. How do you communicate technical issues to non-technical lending users? Answer. I explain the issue in business terms first, then describe what is known, what is being checked, what users should do in the meantime, and when the next update will come. Clear support communication avoids jargon, reduces anxiety, and helps maintain user confidence. Strong candidates know that support quality is judged as much by communication as by technical skill. Question 81. What would you do if the same user team kept raising avoidable tickets? Answer. I would analyze the ticket pattern to see whether the real issue is training, unclear procedures, poor screen design, access setup, or a genuine usability defect. Then I would address the root cause through targeted guidance, process clarification, or enhancement recommendations. Repeated avoidable tickets often reveal a systemic gap rather than just user error. Question 82. How do you support data migration or system conversion in a lending platform? Answer. I would focus on mapping fields accurately, validating transformed data, reconciling totals, testing edge cases, confirming historical records, and making sure users understand what changed. Migration success depends on both technical accuracy and business sign-off. In lending, bad conversion data can affect exposure reporting and customer servicing for years. Question 83. What key reports or dashboards are useful for application support in lending? Answer. Useful dashboards include ticket volume by category, aging by severity, recurring defect trends, workflow backlog, failed interfaces, batch failures, booking errors, user access exceptions, and post-release incident counts. Good dashboards help support teams move from reactive firefighting to proactive control. Question 84. How do you work with vendors or development teams when a defect is identified? Answer. I provide a clear incident summary, reproduction steps, evidence, impact assessment, sample IDs, priority level, and any business deadlines. Then I stay involved to validate the proposed fix and confirm whether it resolves the issue without creating new ones. Effective coordination requires both technical discipline and business translation. Question 85. What makes someone excellent in lending application support? Answer. Excellence comes from combining analytical troubleshooting, calm communication, business process understanding, data discipline, and control awareness. The best support professionals do not just close tickets, they reduce recurrence, improve user confidence, and help the lending operation run more safely and efficiently. Section D. Behavioral, governance, and cross-functional excellence. Answer. Question 86. Tell me about a time you found a risk or error that others had missed. What did you do? Answer. A strong candidate should describe a specific situation, explain how the issue was detected, quantify the potential impact, and show that they escalated it appropriately while helping resolve it. The best answers show judgment, attention to detail, and willingness to speak up even when doing so is uncomfortable. Question 87. Describe a situation where you had to challenge a senior stakeholder or business team. Answer. The ideal answer shows respectful challenge supported by facts, policy, and risk reasoning. The candidate should demonstrate that they can be firm without becoming confrontational, and that they understand escalation is sometimes necessary to protect the institution. Question 88. How do you manage competing priorities when several urgent requests arrive at once? Answer. I assess business impact, deadlines, risk, and dependencies, then communicate priorities clearly and reset expectations where needed. Strong candidates do not simply work on the loudest request first, they use a structured method and keep stakeholders informed. Question 89. What would you do if you were asked to complete a task outside policy because it would help close a deal faster? Answer. I would clarify the request, explain the policy concern, and look for any compliant alternative that still supports the business. If the task genuinely requires an exception, I would route it through proper approval channels rather than acting informally. Strong candidates protect control integrity under pressure. Question 90. Tell me about a time when a process failed and you helped improve it. Answer. The strongest answer identifies the original problem, the root cause, the specific improvement made, and the measurable results such as lower error rate, faster turnaround, or better control. Hiring managers should listen for ownership and evidence of sustainable change. Question 91. How do you ensure accuracy when working under time pressure? Answer. I use checklists, structured review steps, peer checks where appropriate, and clear prioritization of the highest risk fields or tasks. Under pressure, discipline matters more, not less. Strong candidates can explain how they avoid preventable mistakes when speed is important. Question 92. What is your approach to documenting issues, decisions, and follow-up actions? Answer. I document enough detail so that another person can understand what happened, what was decided, why it was decided, and what remains outstanding. Good documentation supports continuity, auditability, and accountability. In lending environments, poor documentation often becomes a risk issue later. Question 93. How do you build credibility with relationship teams, credit teams, operations, and IT at the same time? Answer. I build credibility by being reliable, prepared, transparent about risks, and respectful of each team's priorities. I try to translate issues into the language each audience understands while staying consistent on facts. Strong cross-functional candidates are known for clarity and follow-through. Question 94. What would you do if a borrower or internal user became frustrated or confrontational? Answer. I would stay calm, separate emotion from facts, listen carefully, and focus on the issue that needs resolution. I would not make promises I cannot support, but I would give a clear next step and timeline. Professional composure is especially important in lending because stakes can be high. Question 95. How do you stay current on lending regulations, policies, and system changes? Answer. I follow internal policy updates, training sessions, release notes, regulatory guidance, and business briefings, and I make a habit of asking how new rules affect actual workflow and controls. Strong candidates show continuous learning rather than relying only on past experience. Question 96. What does good risk culture mean to you? Answer. Good risk culture means people surface issues early, document honestly, challenge constructively, follow controls consistently, and understand that short-term convenience should not override long-term soundness. In strong risk cultures, escalation is seen as responsible behavior rather than obstruction. Question 97. How do you train or support less experienced colleagues? Answer. I explain not only the steps, but also the reason behind the steps, because people make better decisions when they understand the control objective. I also encourage questions, provide examples, and check for understanding rather than assuming training is complete after one explanation. Question 98. If hired, what would be your priorities in the first 90 days in this kind of role? Answer. I would learn the portfolio and products, understand the core systems and workflow stages, review key policies and controls, identify major pain points or recurring defects, build relationships with core stakeholders, and look for quick wins that improve accuracy, transparency, or turnaround time. Strong candidates enter with a learning mindset and a practical improvement plan. Question 99. What are the top qualities you believe distinguish a strong candidate in corporate lending and lending support? Answer. The most important qualities are sound judgment, analytical strength, attention to detail, control discipline, communication skill, calm execution under pressure, and the ability to connect business impact with operational and system behavior. A strong candidate combines technical competence with professional maturity. Question 100. Why should we hire you for a role covering corporate loan management, loan origination, and technical support coordination? Answer. The best answer should show that the candidate understands the full lending life cycle, can protect control quality, communicate across teams, and solve problems quickly without losing sight of credit and compliance risk. Strong candidates connect their experience to the employer's actual needs rather than offering generic competence statements. Interviewer evaluation notes. The strongest candidates consistently show that they can connect credit judgment, operational control, and systems thinking. They do not answer only from theory. They demonstrate how they would protect data quality, manage borrower risk, handle workflow exceptions, support users, and improve processes without weakening control standards. Strong signal, what it sounds like in an interview. Credit judgment, the candidate explains repayment, structure, and risk trade-offs clearly. Process discipline, the candidate talks about checklists, validation, controls, and clean handoffs. Technical support maturity, the candidate investigates root causes, not just symptoms. Communication quality, the candidate explains complex matters simply and calmly. Control mindset, the candidate respects approvals, access controls, documentation, and auditability. Appendix. Linux log investigation add-on questions. These additional questions are useful when the role includes production support, batch monitoring, interface troubleshooting, middleware investigation, or Linux-based hosting of lending applications. They help identify whether a candidate can move beyond basic ticket handling and investigate technical issues using logs, process status, and system evidence. Answer. Question L1. If a lending application suddenly becomes slow on Linux, where would you begin your investigation? Answer. I would begin by confirming the scope of the slowdown, including whether it affects all users, one application function, or a specific time window. Then I would review system load, CPU, memory, disk usage, and key application and web server logs to see whether the issue is caused by resource exhaustion, a failed dependency, or an application error. I would also compare the timing with recent deployments, batch jobs, or interface activity. Question L2. Which Linux logs are most useful when investigating application issues? Answer. That depends on the stack, but I usually start with system logs such as /var/log/messages, /var/log/syslog, journal, authentication logs, web server logs such as Apache or Nginx access and error logs, and application-specific logs written by the lending platform or middleware. The key is to understand which component owns the failing step and then follow the timeline across related logs. Question L3. How would you use journal during an incident investigation? Answer. I would use journal to review service level and system level events by time range, unit name, boot session, or priority. For example, I might filter logs for a specific service to identify restarts, failures, permission errors, or dependency issues. It is especially useful on systems that rely on systemd because it centralizes operational events that may not appear in a single text log file. Question L4. A batch job for loan disbursement failed overnight. How would you investigate it on Linux? Answer. I would first confirm the scheduler or batch control record, then review the batch job log, standard output and error files if available, and related application logs at the failure timestamp. I would also check whether dependent services, database connections, mounted file systems, or transfer jobs failed before the batch started. The goal is to determine whether the failure was caused by bad data, environment issues, permissions, or a processing defect. Question L5. What does it mean if you see repeated authentication failures in Linux logs? Answer. Repeated authentication failures can indicate incorrect service credentials, expired passwords, a broken integration, or even a security issue such as unauthorized access attempts. I would correlate the source host, user account, frequency, and timing, then determine whether the pattern aligns with a scheduled process, human activity, or suspicious behavior. In a production lending environment, this should be investigated quickly because it can affect both availability and security. Question L6. How would you investigate a disk space issue that is affecting an application server? Answer. I would confirm which file system is full using commands such as dfh, then identify the large directories or files with do and check whether log growth, temporary files, failed exports, or core dumps are responsible. I would review whether log rotation is working properly and whether the application stopped writing normally because of the full disk. After immediate stabilization, I would document the root cause and recommend preventive monitoring. Question L7. What can error patterns in web server access and error logs tell you? Answer. They can reveal whether users are hitting the application successfully, whether requests are timing out, whether certain endpoints are failing, and whether there are spikes in traffic, unauthorized requests, or upstream dependency problems. Access logs help reconstruct what happened, while error logs explain why requests may have failed. Together they are very useful for separating front-end symptoms from back-end failures. Question L8. How would you trace an issue using timestamps across multiple logs? Answer. I would first normalize the relevant timestamps, including time zone differences if they exist, and identify the exact event window from user reports or monitoring alerts. Then I would correlate entries across web, application, middleware, database proxy, and system logs to build a timeline from symptom to cause. Accurate time correlation is one of the most important skills in incident investigation. Question L9. What would you look for in logs if an interface file did not reach a downstream system? Answer. I would check whether the source job generated the file successfully, whether permissions and file paths were correct, whether the transfer process ran, and whether there were network, SFTP, middleware, or checksum errors. I would also confirm whether the downstream system rejected the file or never received it. A good investigator follows the full handoff chain rather than assuming the failure point too early. Question L10. How do you distinguish between a one-time operational issue and a recurring systemic issue from logs? Answer. I compare the current incident with historical log patterns, recurring error codes, process restarts, performance degradation trends, and prior tickets or alerts. If the same signatures appear repeatedly, that usually indicates an unresolved structural issue such as weak capacity, unstable code, poor scheduling, or flawed configuration. Good support staff use logs not only to close incidents, but also to identify patterns that justify permanent fixes. References.